In the late 1990s, the internet was a wild frontier, full of startups and bold ideas. Among the many companies vying for attention were two Stanford PhD students, Larry Page and Sergey Brin. They had developed a powerful search engine called Google, which was quickly gaining traction for its accuracy and speed. But back then, Google was just one of many search engines, and the tech landscape was dominated by bigger names like Yahoo and Excite. This is the story of how Google almost slipped through the cracks of history and how one decision changed everything. Larry Page and Sergey Brin were not your typical entrepreneurs. Both were brilliant, curious, and driven by a desire to organize the world's information. Their project, Google, started as a research experiment at Stanford University. They believed their search engine could deliver better results than anything else available. But despite their passion, they faced a big challenge: turning their academic project into a sustainable business. With limited resources and mounting pressure, they began to consider selling Google to a larger company. Despite Google's impressive technology, Page and Brin struggled to find a business model. The internet was crowded with search engines, and most users were loyal to established brands. Funding was tight, and the pair realized they needed help to take Google to the next level. That's when they decided to approach some of the biggest players in the industry, hoping someone would see the potential in their creation. At the time, Excite was one of the leading internet portals, offering news, email, and of course search. Led by CEO George Bell, Excite was a household name and a major player in the dot-com boom. Page and Brin saw Excite as the perfect home for Google. They believed that with Excite's resources, their search engine could reach millions more users. So they set up a meeting with George Bell to pitch their idea. In 1999, Larry Page and Sergey Brin made a bold move. They offered to sell Google to Excite for just $1 million. For Page and Brin, this was a way to ensure their technology would survive and grow. For Excite, it was a chance to acquire a cutting-edge search engine. The offer seemed like a win-win, but things didn't go as planned. George Bell was hesitant, unsure if Google was worth the investment. The negotiations between Google and Excite were tense. George Bell wasn't convinced that Google's technology would fit with Excite's vision. He worried that integrating Google might disrupt Excite's existing services. Page and Brin, eager to make a deal, even offered to lower the price. They believed so strongly in their search engine that they were willing to compromise, hoping Excite would see the value. As the talks continued, Page and Brin made an incredible concession. They dropped their asking price from $1 million to just $750,000. They were practically giving Google away, desperate to find a home for their technology. But even at this rock-bottom price, George Bell remained unconvinced. He ultimately decided to pass on the deal, believing Excite's own search technology was good enough. Why did George Bell say no? He feared that Google's superior search results would draw users away from Excite's main portal, reducing ad revenue. Bell wanted users to stay on Excite's site, not leave after finding what they needed. This short-term thinking led him to reject what would become the most valuable technology of the internet age. It's a classic example of how fear of change can cloud judgment. After Excite turned them down, Larry Page and Sergey Brin were disappointed but not defeated. They doubled down on their vision, continuing to improve Google's technology. They secured new investors, refined their algorithms, and focused on building a better product. The rejection became a turning point, motivating them to prove the doubters wrong. Over the next few years, Google's popularity exploded. Its clean interface and lightning-fast search results won over millions of users. Advertisers flocked to the platform, and Google's revenue soared. Page and Brin's refusal to give up paid off in spectacular fashion. Google became the world's leading search engine, setting the stage for a new era in technology. Meanwhile, Excite struggled to keep up. The company failed to innovate and lost ground to competitors. As Google's influence grew, Excite's market share shrank. Eventually, Excite was acquired by another company and its brand faded into obscurity. The decision to pass on Google became a cautionary tale in Silicon Valley. Looking back, Excite's rejection of Google is often called the most expensive mistake in tech history. Had George Bell accepted the deal, Excite could have owned what became a trillion-dollar company. Instead, the opportunity slipped away, and Google changed the world without them. This story is a powerful reminder of how one decision can alter the course of history. The Google Excite story offers important lessons for entrepreneurs and investors alike. It shows the importance of vision, persistence, and the willingness to take risks. Sometimes the greatest opportunities are hidden in plain sight, waiting for someone bold enough to seize them. Larry Page and Sergey Brin's journey reminds us that rejection isn't the end. It can be the beginning of something extraordinary. It's fascinating to imagine what might have happened if Excite had bought Google. Would Google have become the powerhouse it is today, or would it have been lost among Excite's other services? History is full of what-ifs, but one thing is clear: Page and Brin's belief in their vision changed the world. Sometimes, the best ideas are the ones that almost didn't happen. Today, Google is a global giant, shaping the way we access information, communicate, and do business. Excite, on the other hand, is remembered mainly for the deal it didn't make. The story of Google's near sale is a testament to the power of innovation and the importance of believing in your ideas, even when others don't. In the end, it's not just about technology, it's about the courage to keep going.